All right, good morning. It is Monday, December 2nd. It is Cyber Monday, and we've got unemployment out this week. We've got a Fed meeting this month, a few economic reports that go along with the beginning of the month. We also have pension fund money that might be pouring into the marketplace, and we have an equity market that now seems to have everyone on the planet believing that it's going to go up forever. Looking at the market and in the sense of the rally, looking at a daily chart on the S&Ps, one of the things that we could see is that this volume level on using on-balance volume indicator has been a little light in the seat, so to speak. But more importantly, I think it's the level of the advanced decline on this last leg up, this last little rally that I think is, for me, probably one of the key dead giveaways. In the monthly newsletter, I also took a look at a spread chart that I look at every once in a while. I created in my relative strength page. It's looking at the Qs versus the spiders, and we're absolutely seeing a downturn. This has been a great leading price indicator for the last three market sell-offs. Granted, these sell-offs have not been great. The one in May, July, and then, of course, the one in September, they weren't big and they weren't lasting long enough, but looking as well as the McClellan oscillator not showing a sign of being significantly overbought reading. What it tells me is more sector rotation, but we definitely could see a correction in the works. And what that means is just kind of like sideways grinding as people take some money off the table in certain stocks and put it to work in less performing areas of the marketplace. I think once we get through Monday, Tuesday, the first couple days of the month, when the pension fund money starts to pour in from people's 401k contributions. Remember, typically we have that seasonal tendency for the market to rally the day before Thanksgiving, the day after Thanksgiving, and then in recent history, Cyber Monday, and then Tuesday. And I think one of the explanations to that phenomenon is that people contribute to their 401k. They get paid a little bit earlier. So if you're on an employer scale and you're not self-employed, you work for a company, you get paid on the 1st and the 15th. If you get paid on the 1st and it falls on a weekend or a holiday like it did this year, for example, or like it does most Thanksgiving weekends, employers will pay you before the Thanksgiving holiday. So that means the money comes to work before the end of the month on a, from a normal perspective or compared to other months. So that might be one explanation why we see money flowing into the market, because it has to. People are signed up to be invested in the market. Their money has to be in the market. So fund managers get the checks and it gets the contributions are made. So you get that that asset injection into equities. So that might be one of the explanations. And we did see a mild rally the day before. And of course, the day after the market was a different story. We didn't really see a rally on Friday. We did rally and make a newer high, and it kind of came off that high. I promised I was going to tweet, which I did. I am in credit call spreads. I put some on Monday, and I put some again on Friday. And yes, I was trading in the market on Friday because the markets were open. And I wanted to see what happened. And I put that tweet out in a very timely manner. In fact, we got the credit call spreads damn close to the high of the day on Friday. So you can go over to Twitter, and I think they actually timestamp when the tweet was actually sent out. So you guys can all see that. If you're not familiar with getting tweets, I kind of what I do for planning and scanning. I don't do it for what I don't put out trade recommendations in my paid advisory service because that's not fair to our subscribers. But what I do is anything we talk about in trading triggers or for planning and scanning, I generally like to talk about and follow up on that. So if you go to Person's Planet and you just click on the little the Twitter link at the very top of the page, right up here, you see a little T right there. This is the home page of Person's Planet. Click on the Twitter. If you don't know that you can get these by email, just follow Person's Planet, just put your name, email, and sign up. And so basically what we do, if you expand this, so 10 a.m. Central Time, we sent this tweet out, key reversal day in equities. I added to the credits for now the LCD on a specific time period, and I did not relay what time period. But I will tell you it was a higher degree time frame. It wasn't an hourly. It wasn't a daily. But in any event, I think also now's the time to consider the January TZA in the money calls, 50-60 deltas, or DEES IWM credit call spreads. The difference between going with an in the money call on TZA versus a credit call spread for December is December theta, less time. We want time to decay. We want to get out of that trade with as little heat as possible. And the reason I'm looking for TZA, it's an inverse ETF. When the market goes down, if it goes down, then TZA goes up. The reason I'm using a higher degree time frame like January, because it gets you through the December expiration, gets you into the beginning of the year, and a 50-60 delta, if the market does go down, TZA will go up, and that in the money call, it's like a stock replacement, starts acting with less. If the market just stalls, it's not going to have as much time decay theta effect on the premium. So those are the two stock suggestions that I put out, or at least two recommendations I put out on Friday. So in any event, with that said, S&Ps right now, what I would be concerned with, or what I'm actually watching for, even though we have a downturn in the advanced decline, what I want to do is look for A, a moving average crossover, B, I want to look for the market to break below this swing low in the advanced decline. So even though we do have, with the on-balance volume, yes, granted we have lower highs and it's kind of compressing, coiling, so to speak, as you can see, I also want to see that if the market goes down, I want to make sure that the market makes not just lower highs, but I want to make sure that the market makes lower lows. And as you can see, from the low on November 26th, so if we get up our just a little teaching lesson here, if we go right here on the 26th on that high right there, that close, you got to understand that the on-balance volume is based on the close price, not the high, but the closing price, as well as the advanced decline. So looking at this, I want to make sure that if price gets below the close, and the close that day was 1802. 1802 has been acting as a kind of like a real strong support. I mean, the market's really tried to get down. That day it closed at 1802. The very next day it opened at 1802. We had a low of like 1802 3/4. Today we have a low of 1 3/4, which by all practical purposes is 1802. So 1802, the market needs to close below 1802, and I want to see that advanced decline break below that swing low. So 1802 and the levels from 1126 on both the on-balance volume and the advanced decline will give me a little bit more of a clue that we are seeing more erosion in the health and the breadth of the market in the S&Ps. So this is a daily chart, by the way, and now I want to take a look at the NASDAQ on a daily chart. The NASDAQ, while we did break out to a new high in price, we also broke out marginally to a new high, in the advanced decline. That's basis the NASDAQ, or exclusive of the NASDAQ itself. That's what this advanced decline comparative ratio for NASDAQ. It's exclusive to the NASDAQ. Notice that the on-balance volume, we've certainly taken out substantial highs, but we haven't done it with the volume yet. We certainly haven't done it with the volume level over here from October 22nd. So the NASDAQ, again, it's going to be important, and it's got a long way to go before we take out the lows. So it's not just the fact that we have made, we're struggling making newer highs. We have to take out lows. So if that's what we want to be focusing in on right now, price making lower lows and the index and the indicators making lower lows. The Russell has had, and it came close to its option expiration pivot, which is be this month, but it's also near its quarterly pivot resistance finally. So all of the indexes are at or just beyond their quarterly pivot resistance target. So again, those are areas of interest that I have, and the market has definitely expanded close to that area. Like last month, it came close to it, and it just traded and gyrated on both sides, and then we saw the correction right after the quarter ending in September. But it didn't last long. That's that little correction that I was talking about, the one correction. So the market's had actually a couple corrections here. We had the one correction here in May. We had this one little correction back in August, and then this, I guess you could call that a slight correction here that lasted 5 whole days. So we have seen some corrections in the market, and I think that the indicator I was referring to, looking at the S&P versus the Qs, that is also telling me that we're coming close to some type of it's a precursor to a correction in the market. How deep will the correction be and how long will the correction last? That's what we don't know. So I can just say that up in here, the fact that we are near quarterly pivot resistance gives me cause for concern. And I think that the Russell is the one that we typically see that January effect, the Santa Claus rally. So what I'm thinking is the next day or so, if we just linger up here, test the highs one more time, maybe we make a newer high to like 815, 820. I mean, that's really not that, inconceivable to see one more push to the upside. Just one last push to the upside on stellar great news. I don't think a bear would be left in the woods. And at that point in time, then I think we've got a situation that we could see a early month decline in the market, and then the market goes down and everyone will be freaked out and panicked. I don't know what bad news it would be. Maybe it's going to be unemployment. I don't know. Maybe it's going to be Fed speak, the FOMC, the minutes. There's a lot of things. Maybe they'll talk more about Congress not being able to balance a budget and come to terms to agreement. I'm not sure what that is. Of course, they're going to kick the can down. We never know what the shoe is when it falls off. We just know it falls off. And I think right now, we're starting to see some cracks in the eggshell develop. Tops take longer to form than bottoms. And so I think bears are getting very frustrated. People have been selling this thing all the way up. They're now switching from being bearish to bullish, and people are now solidly convinced that this thing's going up forever. But I'm looking at the Dow over here on the daily basis, and I see that we're starting to break down with the advanced decline. The only thing that I do not see a breakdown is, again, the Russell and the NYSE. But the NYSE didn't break out and make a new high as well. So as you can see here, we did not take out the high that we made at the end of October. So here's our actual high figure. It was 235,032, and of course we had 235,206. So definitely you could see we have a lower reading from last week. So on balance volume didn't break out and make newer highs, supporting or confirming this new high breakout. So even the NYSE is suspect, but it's going to take another couple days. Now, don't get me wrong, it will take a couple extra days, because if this market, we formed a doji, by the way, on Wednesday, so just keep in mind that if this market, it's going to have to see some lower closing lows, and we're going to have to see some follow through on the advanced decline, and we're going to have to see a volume downtick here. So the market right now is showing signs of being, there's no doubt, tiredness. Is it ready to get shorted to the end of Earth? No, but we are, as I've pointed out, S&Ps are at quarterly pivot resistance. The weekly advanced decline shows a downtick for a first time in a long time, actually. And looking at the NASDAQ, we didn't see a breakout in the advanced decline like you would want to see with that type of price action that saw its tremendous breakout. The Russell's the only one that did see the breakout, so it tells me perhaps this breakout was more of a short covering, because we're not seeing it in any of the other indices. And we are closer in most of the indices, for example, the Dow, the NASDAQ, the S&Ps, now the Russell, and the NYSE, we are closer to their quarterly pivot resistance, which I think needs to be absolutely respected at this point in time. So little higher prices, and if we can get a pop to the upside, higher prices to me is just take out Friday's high, test that one more time today, tomorrow, then absolutely I'm looking at credit call spreads for January, because there's not enough time for the December, and we want to take in enough premium on that rally. So that's what I'm looking for there, okay? For any planning and scanning, a couple trades that I would be looking at, and the bell's going to ring here in 2 minutes, so I'm just going to rattle this off and give people some ideas on some day trades right now. Okay, so natural gas by the way, we haven't talked about natural gas in a long time. Natural gas typically ends a seasonally strong period of time, and I hit the wrong symbol. There we go. We have intraday data. Okay, natural gas is its pivot. I would say watch for a breakdown underneath the lows at 388. This market, you need to start to see a trend. It's in a solid uptrend. It doesn't have a sell signal yet. So you want to see the market make a lower low. We haven't seen a lower low. We haven't seen a lower, more importantly, closing low. So wait for a closing low. You want to watch each respective day's closing lows. You want to make sure if we do get a closing low underneath the low made on the 29th, it's also below both moving averages. That might give us the turn. So watch natural gas. UNG would be the ETF to play on the short side on that. Next, copper. Copper prices tend to bottom out this time of the year. Copper's already been in a buy mode. I would look to be a buyer above what we call a swing high. That would be a swing high takes out it has the series of lower highs. Look at this trend. Okay, so each respective swing high is lower. So if you take out this 320 area and you're in a 30-minute buy, you generated a 60-minute buy, you did get a snapback, and you're in a daily bullish bias. This is the daily pivot, blue above gold. So if you get above that 320, let's call it 320.50 area on copper, day traders, more importantly, look to see if you get back above the pivot point. Day traders, swing traders, look for acceleration to the upside in price. You got this nice little pattern where the market move up. It's moved sideways 1, 2, 3, 4, 5, 6 days in a row. So if you get a momentum push to the upside, volume looks pretty good on that little rally. Very light on the sell-off here. You get a nice little swing move to the upside. On the S&Ps, I think you have to buy a breakout above that swing high. Number one, it's in a high close doji. I don't think that my message today, tomorrow, we should see from a seasonal perspective higher prices, mainly because of the pension fund money. We have a 60-minute high close doji, and I think we definitely try and attack Friday's high. The market just wants to do it one more time. So quick scalping trades. Look for a buy above, believe it or not, 08. You're in a 60-minute buy, but I want this thing to prove itself, and market's already open. Looking at, if you're interested in crude oil is very fast, furious, great day trading vehicle. I don't think the room does it enough or at all. We've got a couple people. I know Bill McKee trades crude oil, but anytime you get these sideways markets, right, and you get a buy signal and it goes with the trend of the market, right? So the trend is up and you get these breakouts. You can go for these quick snap breakouts in the market. So you have to stop yourself in. The play that I had for you guys this morning already took place. And right now we are in a 60-minute buy. We have a daily high close doji. I know I was kind of hoping to see 90 or lower, and it's just not happening. And so right now we're entering a seasonally strong period of time. So if you break out above Friday's high, which is 93.90, you probably got another 40 cents to test this high right in here, 93.90, and you'll probably see the market want to test into this 94.50 area. Just so keep that in mind. I get bearish again if we take and break out below, not this swing low, but you see this buy signal here on this 30-minute. The low on that buy signal is 92.69. So if we fail that buy signal, so anyone that bought that buy signal, if they probably don't have stops below that swing low, they're probably below that buy signal, the last conditional change candle. If you break down below that last conditional change candle, then odds favor it's going to hit that low and move even lower. So watch for breakdowns, and you can see on my chart here on a 60-minute, that is also a important swing pivot low. So that's a pivot high, that's a pivot low, the market's trapped in between. So if the market goes up and you can't find any buyers to push that market higher, they're going to try and test that low. But watch the low on 92.69 get taken out for a momentum play to the downside. That's all I have for today and this week's planning and scanning, looking at the health and breadth of the market and the overall indices, the seasonal aspect of why we see funds pouring money into the beginning of the month. And after that, boy, I'll tell you what, we've got some interesting things developing, and we're working hard on our shopping list for the end of the year for our 52-week lows, which, believe it or not, there are stocks that aren't at 52-week lows, but there's a lot of names near their 26-week low, and we'll be looking at those. And I'm developing a list of high-volume stocks that enter a seasonally strong period of time that have not joined the party, that may be under selling pressure for tax credit purposes, that at the beginning of the year can turn out to be darlings of the market. So everyone, hope you have a great trading week. Thank you all very much for joining us, and I apologize for the delay, but thanks to Comcast, CMCSA is the stock symbol. That's who our internet provider is. They have had difficulty here with us. So anyway, I'm not saying to sell short there, but I'm definitely saying they've had issues. Thank you all very much.